Thank you so much for being a valued member of our community at Tyler McClay Realty Group. So I'm going to give you a little tidbit of information here. We're going to try to keep it brief as we can, but I want to talk a little bit about the inflation numbers that we received just last week. Okay, so let's get right into it. I'm going to shrink myself here. There we go. My head's big enough. My wife would probably say, your head's already big enough, Ty. Okay, so Canada's inflation rate unexpectedly, keyword here, unexpectedly. So popular consensus was that we were going to tick upward with the price of oil. We know there's some geopolitical unrest going on in two of the three biggest oil producing markets. Okay, so oil prices up. Of course, mortgage interest is also contributing to higher inflation, but overall we've come down, which is great news. Okay, so this reinforces the notion that we're going to see rate cuts happen sooner than later. So when inflation's coming back closer to that 2% target, it provides confidence in, one, the economy as a whole, gives a little more relevance to that soft landing that we can confidently predict now. At this point, things are looking pretty good, and the interest rate hikes, ultimately they're working. Okay, so the interest rate hikes that the Bank of Canada has put into place to curb inflation, to bring inflation down, they're working. And we know now that January's numbers weren't an outlier. We know this, okay? We know that these numbers are real now because we've had two consecutive back-to-back months where inflation's been sub 3, which is awesome news for the economy, phenomenal news for real estate, and really reinforces that confidence that rates are going to drop. Popular consensus among economists is 4 times in 2024. So we know that's likely going to be toward the tail end of the year. Okay? So let's see what happens from here. Basically, inflation's going the right way, right? Inflation's headed the right way. We're working our way down from the peak of 8.1 in June 2022. That was wild, and it was a factor or a result of our own doing. When you make money really, 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 really cheap, Bank of Canada brought rates down to a quarter point. It made money easy to access. Okay, when money's easy to access, we borrow a lot. Not the same rate as the Americans, but we borrow a lot as Canadians. We borrow in the form of mortgages, even credit card debt, lines of credit. Okay, we're taking on debt because it's so cheap to do so. And that promotes spending. So when we have access to cheap money, we spend. And that's what allowed inflation to go nuts. Also, the high inflation was designed, okay, by design. And I'm not a conspiracy theorist of any kind, but numbers are numbers, and this is fact. The government of Canada had 3 options to devalue their debt during COVID. 3 options, okay? We had a ton of debt, and we printed money, and we had 3 options to deal with that debt. 1, increase outputs. We couldn't because borders were closed. 2, reduce interest rates. We couldn't because we were already at a quarter point. Or 3, let inflation run wild, because what inflation ultimately does is devalues cash. So it devalues savings, but what it also does, the big benefit of high inflation, and why a lot of people, such as myself as a sophisticated investor, I'll take on a bigger mortgage. I'll take on more debt. Because that 8.1% inflation, it's eroding my debt. It's eroding the debt that I've accumulated. So 8.1% inflation, $100,000 worth of debt, same time next year, even if I haven't paid a penny of principal, my debt's gone down by a factor of 81. Okay, so instead of 100,000, 8,100 comes right off the top. Now I only owe 92,900, whatever the numbers are. Okay, so that's essentially what inflation does. And inflation devalues cash, but also devalues debt. So the government purposefully allowed inflation to run away. But this is not sustainable for an economy overall. So we've been working now, there's an inverse relationship between inflation and interest rates. We increase interest rates to curb inflation, bring it down. Long story short, this is great news. Really great news. Okay? Now, this is basically the makeup of where the inflation's coming from, or the basket of goods, if you will. Okay? What we're seeing is the majority of inflation now is in the service sector, not so much in the goods sector. Okay? So we're seeing the makeup of inflation more so in services. Any kind of service business you can think of. barber shops, restaurants, service staff, okay, babysitting, dog grooming, whatever. Services are a little high, a little sticky right now for inflation. The goods, the price of goods, other than groceries, are actually working their way down, which is great news. So this is just a little chart that shows you where the basket is. Mostly that blue line is telling you it's in services. Okay, we say shelter here, but it's ultimately it's services. Okay, so what can we expect now going forward? Well, I want to talk to you about something else. I want to talk to you about something else real quick. I'm just going to change my screen. So this is something I want to share with you guys just to take it one step further now. So obviously we talk about inflation. Inflation coming down increases likelihood that rates will come down. Our market's going to go nuts as a result. And I can confidently predict 5 to 6% year over year increase in capital appreciation. Okay, but I want to talk about this because no one talks about this. There's a concept called urban sprawl. Okay, so urban sprawl is essentially the expansion from the middle outwards, sprawling outwards. So depending on how old you are, my clients, you know, if your parents moved out to Vaughan, to Woodbridge, Bradford, Barrie, that's sprawl. We're moving outward from the core. And our model, our model as Torontonians, we have what's called a concentric zone model. So this yellow bit here in the middle, that is Toronto. That's Toronto core. And then we've got our zones working our way outward from the core. The further we get from the core, we call that sprawl. The further the sprawl, the longer the commute. Arguably should be, the cheaper the real estate. Now, the thing about Toronto is, or the GTA, we have Greenbelt, we have Lake. There's only so much space, so much developable land we can use. Okay, so that's what brings me to, with the predictability in interest rates, the predictability in the market, the insane immigration numbers that we're seeing, and then understanding what a city-centric model is or a concentric zone model is. The only way we can go from here is up. So my take or my personal investment strategy is condos. Entry-level condos, studios, one-bedroom proper. I'm loading up on condos in the downtown core. I think with the confidence in the market, the stickiness in terms of the condo market to come back, we still have a little bit of a gap here to take advantage of. And that's basically what I'm doing. I'm taking advantage of what we call the concentric zone model. Everything outward from Toronto is a spillover of Toronto. So again, if Toronto goes up 10%, Scarborough, Etobicoke will go up 8%. Okay, Vaughan and Oakville and Pickering will go up 6%. Barrie, Hamilton, and Oshawa or Bowmanville will go up 3.5%. So the further we get from the core, the less appreciation, okay? But downtown core is always ultimately going to have the most jobs available, the most job creation, the highest incomes, highest rents, lowest vacancy rate for rents, and highest appreciation, arguably, in a concentric model. That's essentially what that means. So some of you guys, when you were younger and looking to move outward, finding that affordable piece, right? Whether it's you, your parents, your grandparents, whatever, we moved out to Vaughan. Vaughan used to be farmland, man. And now they're selling condos for almost the price of downtown core condos. Crazy. But that's not an option anymore. Where are our kids going to go? Where are our children going to go? Where are us as first-time buyers going to go? We can't, even if we did go 2 hours and we went to Collingwood, it's expensive. So it's no longer about the sprawl now. It's no longer about moving outward, okay? It's no longer about going this way. Now it's a matter of going upward and allowing that, not sprawl, but growth and entry-level units to happen in the condo market. So that's where I see things going. Super bullish on the condo market, especially in the downtown core. With predictability coming back, rates likely coming down, it's an incredible time to be getting into something, and that something should be, as far as I'm concerned, downtown core condos. Have a great day. See you next week.